What's up, everybody? Monday morning, welcome to today's edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. Hope everybody had a great weekend. We're about to take a look at our markets, identifying potential breakouts and reversals from an educational perspective. Do me a favor, if you're new to the channel, click the subscribe button, hit the notification bell. Question of the day. Do you have one stock play that you feel really strongly about, right? One stock play that you've just been hanging on to or taking a look at. What is your one? Put it in the comment section down below. I think it's really great for people to share that back and forth. So use the comments, means a lot. Let's go ahead and dive right in. So we are down about 5 points in the S&P, and some of these lines are from last night's live trade room when we were taking a look at it. The level that I looked at last night for a potential breakdown was just below this 4650 area, and when we were looking at it, this was the low right at the first candlestick from the open, and we popped up from that area pretty much until the London Open. We were unable to really break back down below there, but that level, in my mind, is still a potential for a breakout, provided that we get proper basing. We still definitely would need proper basing in order to give that it's real entry possibilities. So I think that level is still valid as an opportunity for a bit of a breakdown. Now there is a little bit of demand down here to pay attention to, and so without basing, this level is not going to be very strong. We still do definitely need the basing. If we just cut right through here, then look for this this tweezer top area here as a supply level for a retest. But as it stands right now, I think you do have a potential for a breakdown in this S&P. Moving over to the NASDAQ. The NASDAQ, we're looking at something very similar as a potential breakdown exists right here for us for a small play, provided, once again, that we get quality basing. And that would really be on the 15-minute chart is where I'd want to see that on the much smaller time period. So we did get a nice little touch. We are close to getting a little bit of basing here. If you're a bit more aggressive, you do even have a little noisy cricket wick over wick level here. I think that's actually a fairly clean little wick over wick zone that was formed in the overnight, and that is 15,562 by 15,578 for a potential reversal if that hits fairly quickly. If you're looking, more of a swing trader, we talked about this last night. Those are day trade entry levels because you've got a little bit of a demand down here. As a swing trader, you've got a level that's up here a bit higher for a potential reversal coming back down. In the Russell level that we had looked at last night did come into our 15-minute area of supply. Unfortunately, we came into the level and then it just kind of did nothing. Hit it again, got a little move away. Hit it again, got kind of a move away. So what does that tell us? Well, if I've hit that level this many times without really falling from that level, then that's not really great supply, right? I mean, that supply did exist. There was a little bit of supply there. But I might actually be better off looking to see if we can break out to the upside here. Now, there's not a ton of room to roam because I do have more supply right up in here that could stall price moving much higher. But I think if you want a few points, if we start off the day this morning as the market opens with some strength, this might be the way to go. So if we start off the morning with some strength, you've got a Russell upside breakout. If we start out the morning with some weakness, then you've got an S&P downside breakout that I think are probably the better of those two plays. Looking at our energies and metals, a couple of things that we looked at last night. One was the gap and go in natural gas. So nat gas, we looked at this for a potential gap and go entry. We did gap up. We gapped up in the direction of the predominant trend, our predominant trend being a 4-hour upward trend here. And we gapped outside of the prior day's range, the prior day's range being back down in here. So strong opportunity for a gap and go. However, we have started to fade that gap, and it is not giving us an entry yet. The level is still valid, by the way. Just because we've come down doesn't mean that I still couldn't use this for an upside breakout, and I think that still is valid if price comes into there. Now, until then, in the meantime, we could certainly see price continue to fall down to this whole round number and see if we make it down to 4 for this kind of whole round number as a price magnet. There could be a little bit of a reversal to the short side up here if you wanted to take a day trade. I think I'm just going to hold off and wait to see if we come back up above this region. And I've seen that happen on Gap and Go. Sunday night you get a gap, and then you don't really get an entry until Monday or sometimes even Tuesday. Crude oil, we have an upside breakout above 80.47. We've got a couple of downside reversal levels in here. This 15-minute level is a fairly clean little area right around the London Open. Now, we put it as a confirmation entry because the level that's below it is the 1-hour level, and a 1-hour level is typically stronger than a 15-minute level. It's a rally-based rally above a pivot low. And so I would look at the first level to be a confirmation entry, the second level to be a limit entry for re-engaging this big picture direction. Now, as far as some of the other markets that we had looked at last night in our setup, we had soybeans was a decent little setup for a pullback to this area of demand. Unfortunately, didn't quite make it back to that level. The level's still valid on that wick over wick. Didn't find really much in corn or much in bean oil, but wheat, another one that had a little demand level below us. So two really nice demand levels in those ag sessions on the hourly chart. Looking at our bonds and currencies, bond markets continue to show a fair amount of weakness. We did get a bit of a breakdown last night off of this region, but then 6 candles later, what happened? Not a whole lot. And so this one just didn't really go anywhere. I'm not a huge fan of trading bonds in the overnight sessions anyhow, but I mean, we broke down and then just kind of stalled, right? It stalled for quite a while before getting the last couple of candlesticks have popped right back up. And so a little bit of momentum slowing in our downtrend, but I think could just set up for another reversal. So we'll look for a supply level on that one later today. In the euro, it's just so sideways, right? This is not a great market to be forcing trades in. Did have a couple of people last night taking a look at this one from a breakdown perspective and said, hey, if it breaks down from here, is there a trade there? There was. Turned out that we did get a pretty nice breakdown from that level. So that actually turned out to be a pretty decent little runner. But I think while we're still in this big picture sideways trend, it's a little bit higher risk. Canadian dollar did break out to the upside here. We got a little bit of an upside breakout above this 79172. And so it's chopping around here still. We're 1, 2, 3, 4 candles into it and have gone nowhere. So keep an eye on that one if you did enter into that position. Looking at our crypto futures. So first looking at our Bitcoin and then looking at our Ethereum, micro Ethereum futures. So remember, these ones up here at the top are the micros. These ones down here are the big boy contracts, which require a lot more margin. Looking at this Bitcoin, we are continuing to show a bit of weakness. So this would be our next supply area right up in here that we just set up. This is a really nice structure, this little base drop. Let's see if we get a quick retest on this one at some point today, because our 4-hour trend is very much to the downside. I really anticipated a bit of a bounce right at this region here, and it's really just kind of stalled out at that level. We are sitting here at also a potential breakdown area on the much bigger time frame, right? Looking at the 4-hour. Let me take a look at the daily here. Yeah, so let's see if price continues to break down from here. I mean, when you look at it, Bitcoin's gone from, in November, a high of 69,000 all the way down to just about 40,000. So it's, I don't want to say it's been cut in half, but it's getting there. And so, there are many, Bitcoin traders that would tell you this is a bargain. This is the time to buy it. I would say that let's follow the trend, and when the trend changes direction on the 4-hour chart, then we step back in and take a look to buy. Until then, let's look for shorts. And then on Ethereum, same picture. We had our level up here that got retouched on Thursday. So hopefully, if you guys were we're paying attention to our last session that we did on Thursday morning. You caught this move. We got a really strong move away from that level, and so the next area to look at would be this gap fill area right in here, as kind of the next little opportunity. Remember, Ethereum futures don't have the micro Etho futures don't have the same liquidity, so it's not a product to be used until the regular session opens. But just taking a look at it, we've looked at this. We've looked at it a couple of times, and both times that we've looked at these Ether futures, they have set up and worked out extremely well and respected supply extremely well, right? So this might be the kind of the third go at it. Let's see if it runs down again from this level. Now, those are our futures sessions for today. I do have a couple of stocks to look at for tonight. For today, I want to take a look at a couple of stocks as a swing trader. We're going to look at 3 bearish positions and 2 bullish positions for you to kind of keep in your pocket for the week. I like to give you a couple of them for on Mondays to take a glance at. So, starting first with the bullish positions. So on the bullish positions, the first one would be Advanced Auto Parts. If you look at it, the market has really come down over the last couple of days. But even though the market has come down, Advanced Auto Parts has remained remarkably resilient. Fair amount of strength through here. We did have a recent pretty large dividend that was paid out. And after that dividend, we got a little bit of a sell-off, but then rallied back up. And as the market has shown weakness, this has shown a tremendous amount of strength and resiliency. And so if we continue to trade a bit higher, if we continue to stay up in here and the market does start to see some strength, I think this could be one that could break out on some strength. Look at some strength on a breakout on here. Now, ideally, what we would see is a breakout combined with an increase in volume. An increase in volume on the breakout would be ideal. So look to see a breakout above 243 with above average volume. And above average volume would be above this 50-day volume average. So keep an eye on Advanced Auto Parts. Another one would be CF Industries. Chuck Fulkerson Industries. No, that's not what it is. But CF Industries, we have a really nice drop and a pullback. And the pullback, while it has pulled back just like the rest of the market has really, we've pulled back. We had a fairly large volume day Thursday, but the volume day, Wednesday, but the volume day on Friday was significantly lower. And our pullback itself has been for the most part, on lower than average volume. And so if we get higher than Friday's high, I think that you could see, kind of the next leg up. I also believe that this is on our most recent drop, if I'm not mistaken, a 38.2 retracement. Yeah, we dropped right down to about the 38.2 retracement. Old resistance acts as new support, and we have a reversal hammer candle. And so all of that lines up for what could be a decent opportunity for price to trade higher from this point. Now, those are the bullish ones. Let's take a look at a couple of bearish opportunities. So the first one is Coinbase. So Coinbase, as Bitcoin has dropped, people's love of Coinbase has also dropped in the last couple of weeks. And so this is really an extension of the Bitcoin drop. And you're looking at a breakdown, I think, below this region. We're getting a little bit of sideways price action here. When I look at, I'm going to throw my Traders Army implied volatility range indicator up. I don't have anything on here because I have to have a full year's worth of data now that I think about it. Let me just pull up my regular implied volatility range. Quick study, all studies. I forgot that I've got to have 1 year's worth of data for that one to work. My regular implied volatility. So our implied volatility relative to its normal range, if I look at it in this format, here's the highest volatility, here's the lowest volatility. We are right dead smack in the middle. I I like to, this is a good way to cut the volatility in thirds, right? So we're right dead smack in the middle of our implied volatility range for the year. And so I would say that a bear put spread would probably be the way to go at this point. And a bear put spread would set you up for price to continue to drop from this region. I wanted to see if we were extremely high or extremely low in volatility to see if it's set up for a ratio back spread for those of you that are familiar with that trading style. Now, if you don't like the breakdown, look for a potential reversal up here at about 250. I think we set up for a nice little reversal for price to then head back down. Next is one we've looked at a fair amount of times here in the DMC is ROKU. And ROKU continues to fall as they are having a little bit of an issue, I think, monetizing their product in the way that they expected they would. Wall Street is not happy with it, as it's gone from 490 at its high down to 180, basically where it is today. And so a retest back up to this region here, the origin of this very strong move down, would be a pretty good entry. I don't know when that's going to happen or where that's going to get there. Looking at the weekly chart, we are coming in to some weekly demand, but this is a really strong red candle. I wouldn't be surprised to see us trade back into around 120 to 100 to 120, where we had a lot of fair price value right in here before being extremely strong right through there. Now, if you look at this as a really, really big double top, which I could see somebody looking at this as a really, really big double top, that measured move would basically say that we would trade all the way down to here. And I don't know that we're going to make it that far down, but for a swing trade or a position trade, continuing this to the downside is definitely the way to go, selling any rally. And we could have a short covering rally coming soon, right? There could be a short covering rally coming up soon. And then last, and certainly not least, is CRM, Salesforce.com. Salesforce has dropped from 311 down to 228. Very strong drop in the last few months as it continues to show signs of weakness. This is actually setting up for another gap and go to continue to drop down. I would once again want to sell on a rally. Ideally you'd sell on a rally back up to a supply level. Problem is I don't have a great supply level at this point to sell into. Certainly there's the gap fill area. But if we stay above this line at the open and you want to just get short right at the open, if we stay above 226, and it looks like we're going to open up above there right now, 226.80 by 229 in pre-market trading, then I think you would look to short it as it gets below that region. So, all right, there you have it. Those are our stock picks for today, as well as our futures trades. If you guys have any questions, as always, send us an email, support@tradersarmy.com. Until tomorrow, everybody, I'll talk to you soon. See ya. Hey, thanks for joining us. If you like what we do, please make sure you hit that subscribe button. It's the only way the computers know that you're actually alive and really care. And go to tradersarmy.com today to learn a bit more. And if you want to see some of our other videos, click here in the box.